Thank you for your presentation. First question we have for you. When you discuss coherent attention, are you considering this a neurophysiological factor? And if so, how would you relate attention to physiology?
That's a very good question. So when I think about coherent attention in the way basically that the GCP does, because the studies I've done are not really related to coherent attention that has already been studied. I'm trying to study a little bit something else. I'm just saying that has been shown to be reflecting into GCP data. And I'm going to take that results as a given. Looks very solid to me. So assuming those are probably correct, that means these and these results would fall out. Like, for instance, searches made on input. What do I mean with attention there? That means that I focus on something and I am attentive to it. So that would be the straight answer there.
Thank you. And are you implying that GCP data can be used to predict financial trends? Yes. And if so, can we fund our research this way?
Well, yeah, that's something I'm looking into. I'm not fully done yet. What I'm trying to now is trying to sort of look into if I could beat the forward-looking market, because that's what's needed if you want to do it. But it is very suggestive that it can actually be used in this kind of sense. Yeah.
Thank you. When evaluating the GCP data, are you using a direct correlation between an upward trend in GCP data and an upward trend in the financial system?
Well, I'm looking into changes. Because if you look into say stock market data, that's always going to have a trend because there's prices. Prices tend to increase with this like a trend variable. So I'm looking at the daily changes there, and I'm looking into more or less the daily changes in the GCP data. Or that one correlates with the change. So to get that what's called the stationarity in time series econometrics, I use the changes. That's what I'm looking at. Yeah.
Okay. And also, do you believe the data you're exploring is sufficiently robust to develop a trading system?
I suspect it is, but I wouldn't really want to answer it yet because I need to evaluate it. But it seems to be robust enough, I would say. I mean, of course, if you could increase accuracy in how we're picking up sentiment or coherent attention, of course, that's going to be very useful. But even now, it seems to be very much useful. So, yeah.
Thank you. And are you suggesting that a coherent attention is distinct from sentiment? And it seems they might be entangled or enhance one another, perhaps, question mark.
I think they're codependent in the sense. I think they are basically they're two different processes, but they are correlated in a sense. So I mean, you can have a good mood. You don't need to be focused to be in a good mood. You could be in the sunny outside, But then it could also something could happen. Maybe you're a sports fan and your favorite team wins. You're going to be happy for that one. It could be attention seeking there. So I think they are definitely correlated, but they are not the same.
Just last night, I was talking to Roger Nelson about the GCP data. And we were talking about the fact that the idea of a whole bunch of ones being positive or a whole bunch of zeros being negative is really subjective. And so, how do you apply that within your model?
Thank you for that question. I don't discriminate between a bunch of zeros or a bunch of ones. I just say, if it's a very unexpected bunch of zeros or a very unexpected bunch of ones, that one would be a GCP data effect. But I don't discriminate between zeros and ones. I'm just saying, there is something that deviates from randomness in here. So it could be something positive, or it could be very negative. And that's it's actually very tricky to disentangle that one, but maybe it can be done. That's something future study to look at.
So how do you use that then to determine to forecast whether it changes going up or down within the market?
Well, basically I look at daily changes. So say you would look at the New York Stock Exchange, if that the closing price the day after would be higher or lower than today's, though you get a number, and then you would correlate that one with the max z variable. It could be in levels or in changes. That doesn't really matter with the max z variable per se, because it's noisy enough, so it doesn't carry with it a trend. But that would be the way to do it. So look at the change and then to the GCP data.
Well, I really appreciate you adjusting your schedule to be here today, because we were talking about scheduling, and I think this is a really great session, and I'm happy that you're been able to be included today.
My pleasure to be here.